On May 31st, we bought leading altcoin Ocean after it broke out above key resistance and pulled back to support. Just 2 days later, we sold it for a massive gain of 16%. In this video, we're going to take a quick educational walkthrough of exactly how we bought that stock, why we bought it where we did, why we sold where we did, and then we're going to dive in and take a look at some other hot altcoins on our radar. Stay tuned and watch to the end to make sure you don't miss out on our next big winner. Let's dive in. When a weak market starts to recover, the altcoins that score the biggest gains are often former market leaders. And Ocean, if we scroll back here to the daily chart, we can see was a big leader back earlier in the year, rallied from 10 cents all the way up to about 50 cents, about a 500% gain over the course of a month and a half. And since then, it's been in correction mode. But when we started to see the market reverse, we kept an eye on these former leaders and looked for viable chart patterns. Now, in a bull market, we're focused primarily on relative strength, the cryptos that are trading at their highs, buying the pullbacks and buying the breakouts. Now, Ocean, in this case, was actually a great setup because it ticked all the boxes for us for a quick bounce play. And let's take a look here. First of all, we had been keeping an eye on Ocean ever since it formed this long multi-week base, holding at support right around 32 cents. Despite the market moving lower with Bitcoin and Ethereum, Ocean refused to move lower and found a very solid floor at 32 cents. So that gave us an indication that it was probably going to be a leader and have a pretty nice bounce once the market started to bounce as well. So it got our attention on May 30th when the price broke out above the 50-day moving average, this red line. The 50-day moving average is a key intermediate term indicator of support or resistance that we definitely track. And on this particular day, Ocean not only broke out above its 50-day moving average, but it broke out above its downtrend line as well, a 4-month downtrend line from the February highs. So when you've got the price breaking out above not only a moving average, but a key downtrend line, that's a significant breakout. So the first thing we look at is the volume. Did the volume confirm? In other words, did we break out on higher volume? And yes, we definitely did. In fact, volume surged on that day to its highest volume in several months. So we had everything that we liked about this trade setup. We had a breakout above two key levels of resistance on big volume. Now, in this market, we're definitely not chasing. So what we look for when we see a breakout is we then look for the first pullback to the support level. Remember that a prior level of resistance becomes the new support after the resistance is broken. So we therefore knew that both this downtrend line and the 50-day moving average should serve as support on the first pullback. And that pullback came the very next day after the breakout. Price rallied a little bit higher that morning, up to about 40 cents, and then pulled back. And notice here the price just dipped just below the downtrend line support and held above the 50-day moving average. So we were watching. After we saw this breakout the day before, we were looking for an entry point, and we actually got our entry point, and we sent a trade alert to paid subscribers of Morpheus Crypto, notifying them that we were buying at 37.5, 0.375, which was pretty much right near the low of this pullback, right on the downtrend line. So we bought it and we put a stop just below the low of the breakout day, was our stop price. And the very next day we got follow through. The price headed back up and closed near the prior day's high. And one day later, the momentum continued and rallied again. Now you notice this wick on the candlestick, inverted wick, which means that the price traded up to that level at some point during the day, but finished the day lower. And in a healthy bull market, we like to maximize gains. So what we generally do is rather than setting a profit target, we trail stops higher because the cryptos we trade are often at new highs. There is no resistance, so we just generally trail stops. But in this particular setup, we knew there was a lot of resistance from the prior highs. This yellow line, you can see that there was resistance at 45 cents from back in April and also back in March. So we knew that it would be difficult for the price to get above this key resistance level around 45 cents. So at the time of entry, our goal was to sell into strength as the price neared this 45-cent level. And because the move happened so quickly, just 2 days after our entry, we made a judgment call to sell. And we got a little bit lucky there. We ended up selling right near the very high of the day and actually sold at 0.4354. Again, sending a trade alert to members and letting them know we're getting out. So that equated to a quick 16% gain on just a 2-day hold. And that turned out to be a good move, selling into strength as we neared that high because the price did pull back later that day, and now it's consolidating. So We could make a run at this 45-cent level if the price action holds up here, but we wanted to take the quick profit and then look for a potential reentry point. And this is the type of trade that's working well in this particular market. Let me say that again. This is the type of trade working well in this particular market. Again, if we're in a healthier market, we're generally holding cryptos more than 2 days. We're looking to hold for a week to sometimes up to a month or two if we got a steady trend, but we're definitely not in a steadily trending market. So we're looking to basically do hit and run trading, looking for low risk setups, waiting for pullbacks to support, and then selling into strength. And typically in a strong altcoin bull market, we're looking to make 20 to 40% gains on our average trade. But now we're looking for something like 15 to 25% gains on most of our trades. So that was very attractive, the 16% gain in 2 days. So we locked it in. Notice volume has stayed strong on the up days. So we could definitely see another run in Ocean in the coming days, and we'll keep an eye out for a potential reentry. But for now, we've locked in the profit on Ocean. In the Morpheus crypto portfolio, we also just sold Sand. We bought Sand on the 25th of May when the price action formed a double bottom and moved above the high of the 10 and 20 day MA convergence. Again, looking for a quick bounce play. What again really attracted our interest was the volume, strongest up volume that the price action had seen in several months. So that grabbed our attention, and we liked the risk reward of having a stop just below the low with an entry point above the 10 and 20 day MA convergence. A couple of days later, the price broke out and ran into resistance at a 50-day moving average. The price did hold above support of the 10 and 20-day moving averages and kind of consolidated here for about a week in a tight range. Now, yesterday, the price finally pushed above the 50-day moving average. And normally when we see that, we're going to see kind of a big breakout. But because we didn't see the momentum we were anticipating on that move above the 50, we had a bit of deliberation. So we went ahead and made a judgment call to take profits and locked in Sand for a quick 10% gain. Next, let's take a look at SXP. We've mentioned SXP in several videos over the past week, and SXP was again another former leader in the last bull run and rallied from 25 cents up to almost $1, about a 400% gain in just a week back in late March. And since then, it's been in correction mode. So we've been looking for a significant bounce in SXP, but obviously we don't bottom fish. We wait for the confirmation of the price action. And you can see here about 4 days ago, SXP on big volume, it actually scored its biggest volume in more than a month, moved above its 20-day moving average. Now, the price failed to hold above the 20-day, but it did hold the 10 and settled into a tight range here over the past couple of days with the volume declining as the price consolidates. Now, let's zoom into the 4-hour chart. This is the daily time frame, but let's go ahead and take a look at the 4-hour chart. Now, on the 4-hour, it's kind of interesting here. We see the price action clearly running into resistance at the 44-cent area, rallied from 40 cents all the way up to 44, about 10% in one day. Sharp pullback to 41. Next day tested it again, pulled back again. So each time, though, over the past several days, notice that we're forming higher lows, right? We keep forming higher lows as the 20-period moving average holds, and the price action and the volatility is getting tighter and tighter. So that tells us that we could soon see a confirmed breakout above this 44-cent level, which is, as you can see, horizontal price resistance from a multi-week base of consolidation. So we're already in this trade from a lower price. We're in this from 42.05. So we've already got a small profit buffer on this trade, about 4%. And we may actually look to add to the trade when we get the confirmation of the breakout above the 44-cent area. So keep an eye on SXP for a potentially explosive bounce if it can confirm the breakout above 44 cents. As always, watch the volume for confirmation. AGIX is another former leader in the AI sector, the same as Ocean. And AGIX recently formed a bottom and a higher low. We made a 14% gain on this first move higher and then got out and recently just re-entered because now we see the price action clearly holding the 20-day moving average as support with the 50-day moving average squeezing from above. So we've got a tight volatility contraction here. Price action's tightening up as the 50 comes down to meet the price. And we've got a positive volume pattern. Notice we've got higher volume on the up days and declining volume on the down days, which means that we're seeing some stealth accumulation here. And we went ahead and re-entered AGIX right after it bounced off this 20-day moving average, giving us a good risk reward with a stop just below that level in anticipation of a breakout above the 50-day moving average based upon the volume pattern we've been having. So Right now, nothing happening, but if we get a move above, let's say above the 31 cent area, that will be a breakout above the 50-day moving average. And on this third test, it's likely to stick. So AGIX is a potentially explosive play, but it's got to first confirm by getting above the 31 cent level. 2 weeks ago, we said that TRX was a top relative strength crypto because it was one of the few that was trading above its 10, 20, and 50-day moving averages. So while Bitcoin and Ethereum were trending lower, notice that TRX had actually broken out to a new swing high. And over the past 2 weeks, just basically drifted lower, came right into support of the 20-day moving average yesterday, and ripped higher on big volume to another new swing high. So TRX continues to show top relative strength and is in play on a pullback. We mentioned the emerging relative strength in QNT in our last video, and QNT continues to show great relative strength since breaking out above its 50-day moving average last week. The price action has been consolidating in a tight range near its highs, and we continue to look for a low-risk pullback entry. We're currently looking for a pullback to the area of the 10-day moving average, which, by the way, has just crossed up above this green line. It's just crossed above the 50-day moving average, which is a bullish signal for the short to intermediate term trend. So we're currently looking for a pullback to about the 111 to 112 area, which would give us a very low risk entry point if we see that type of pullback. Otherwise, we'll look for a bit lengthier of a consolidation and would consider buying a breakout above the consolidation if we get a lengthy enough consolidation with a bullish volume pattern. But QNT definitely deserves a spot on your radar as a potential breakout setup or pullback entry due to its emerging relative strength. Finally, let's take a look at Ethereum as a proxy for the overall health of the altcoin market. Just to refresh your mind, last week, Ethereum had broken out above a downtrend line from its mid-April high, and that's this candle you see here. And since then, price action was a bit choppy after that, sold off a little bit, but notice how the 10-day moving average held as support on that pullback. That's key, that the 10-day moving average held as support. And then just yesterday, we had a rally that put the price action back above the 50-day moving average. So Ethereum is currently above its 10, 20, and 50-day moving averages, which is positive. And also it's now in striking range of breaking out to a new swing high. So keep an eye on this 50-day moving average, which is right around 1904, with the rising 10-day MA just below that. So that 1870 to 1900 area is a key level of support we want to see Ethereum hold on any pullback. But as long as Ethereum continues to consolidate here in this range, then we could see continued further strength in the near term in the altcoin market. So although we don't trade Ethereum when it's choppy, it is good to keep an eye on it as an overall gauge for the health of the altcoin market. So overall, altcoin action is improving. We're seeing some pockets of relative strength, although the gains have been a bit subdued. It's definitely a market where you have to take the profits quickly. As we mentioned, hit and run trading, the profits are there. Just look to make 10, 15, 20%, get out, sell into strength. And that's what we're doing. And if you're not yet a member of Morpheus Crypto, head on over to the morpheustrading.com website. On the website, click on Crypto Picks, and you will see an explanation of what all you get, which is our trade alerts. You get access to our live chat room with educational chart review and a whole lot more. And you can get started from just $35 a month based on your annual subscription. So check it out. We'd love to see you in the chat room. So we hope you got some great ideas and learned a lot today, and we'll see you back here in our next video. Don't forget to like and subscribe to our YouTube channel.